Hello, 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 hello. What's going on, everybody? Welcome now, Stock Trades. What's going on? What's going on, B-Rad Cooley? What's going on? Love to guys see your faces or see your names. You know what I mean. All right, guys. So this video needs to be shared. Put it on Stock Twits. Put it on all different types of forums. This is going to be a very informative video. Lots to discuss. Lots to talk about. Really, we're going to go ahead and initiate a price target for Clover Health. Given that we have sufficient data, and we're going to go ahead and just just do our thing. But just as a disclaimer, we're not financial advisors. We're not stockbrokers. We have no credentialing. Just think of us as a grain of salt living inside of a basement that have no nothing, right? Just think of it like that, right? And I think that'll suit you well in life, right? What's going on, Ken? What's going on, GP? Love catching you live. I'm excited. Abby, you guys have any questions, drop them in the chat. That's what it's all about, okay? All right. So today we were doing some research and we found something interesting. In fact, let me just go ahead and open up a little mouse pad screen here so I can go ahead and zoom it on in. So as you can see here, ladies and gentlemen, as you can see here, this is the gross margins analyst forecasts for Clover Health. And what we're basically starting to see is that if you were to look at 2024, analysts were thinking 62%. Obviously, that's wrong because it was actually 20%. But I think they were incorporating the SaaS. They were thinking and hopefully prescribing to the fact that Clover Health may drop some data that gives them an opportunity to estimate what the subscription as a service SaaS-like deal that they have regarding their counterpart assistant. Now, if you go back when we talked about gross margins, go back to what Peter, I think it was in the city or one right after they released the SaaS news, the people were very inclined to ask questions regarding what is the gross margins. And they said it's not going to be in the 80s and 90s, but it is going to be in the mid 50s and 60s. So I think that's that. And if you look at, 2025 and 2026, you're seeing gross margins to be 59 to 60%. And that's actually pretty huge, guys. The gross margin, that's like, you can see the trend here. That's an explosion. I mean, that's an explosion in the trend line, right? Regarding Clover Health's gross margins. I mean, the things like are turning around. Now, if you go ahead and look at the quarterly reports, you could see the last couple of months in the year of 2026, you could see it goes back down to 20%. Now, I think this is just because it's too far out for analysts to, give a damn to actually give proper due diligence. And it kind of reminds me with our brain machine, which is the data we provide from Al Stock Trades. For folks that are interested, we are having the New Year sale. Take advantage, link down below. But if you go ahead and take a look at the annual estimates for Palantir and actually go in and look at the overall net income, you can see the average for 2024, at least the low, is 823 million to 999 million. But then in 2026, you can see it drops down to 512 million. And obviously, I don't think that net income is going to, for Palantir, drop. It's just, I think it's far out, and analysts just didn't, give a good low average. So I think that's kind of what we're seeing here, why this is faltering off. Well, as we get closer, like I said, we'll get more data. So we're going to go ahead and do what's going on, Smiles. So what we did right now is we calculated the revenue growth for Clover Health based on analyst estimates from a low value to a high value, right? From an average we calculated it from a starting point of 1350 and then all the way to 1375, which we basically got from their guidance here, 1.35 billion to 1.375 billion, which you can basically find if you Google Clover Health Investor Relations and go to the Q3 reports for 2024, you'll find this in the PDF, right? And what I did is that I calculated the growth rates. And what I did is I got growth rates anywhere between 16.23% to 18.38% for the growth year of 2025. So what analysts are expecting is for Clover to grow anywhere between 16 to 18.38%, right? Or 39%, because this basically is a big number, which then makes us a 9 going back to elementary school, right? So So with that, we're going to go ahead and do an intrinsic value calculation and go ahead and set a price target, right? So when we go ahead and do an intrinsic value calculation based off of the growth rate for Clover Health now, you have a growth rate of 9.33% if you average the 3 quarters for Q1, Q2, and Q3 of Q4. Obviously, Q1, Q2, and Q3 of 2024. We obviously don't know the Q4 because that's part of 2020. That's going to be released in February or March, potentially. But the average free cash flow is 118 million. And if you divide it by the 501 million outstanding shares, you get a bear case of 292 to a bull case of $5.10. So currently right now, Clover's trading between its bear case and base case. So when we go ahead and do the intrinsic value calculation, when we go ahead and put the overall revenue estimates, then we should look at the bear to base. Obviously, market dynamics can switch, and this thing can go all the way up to its bull case, right? But again, we're just going to do that based off of what the market's currently trading at. So when we do that, and we're going to do different types of calculations, we're going to sustain the 118 million, which is just Q1 to Q3 of 2024 average free cash flow. But this time we're going to grow them at 16%, which we calculated from the low aspect of the 16% we calculated here, which is due in part by the guidance and the future analyst expectations, right? Like I said, the more data we get, and the more we can basically do an intrinsic value here. And what you can see here, we're going to get a bear case of $4.49 to a bull case of $8.30. And that's just growing 16% at 118 million of free cash flow. Now, if we were to upgrade this by taking 118 million divided by 3, which is 39.33, and multiply that by 4, you get before we get ahead of ourselves, we did 16%. Now let's do 18.39%. And by doing that, you get a bear case of $5.24 to a bull case of $9.87. So you can ultimately basically see that this is looking pretty damn sexy. And, Clover tends to technically always under-promise and over-deliver on average. So maybe the revenue rates might even go higher. So it could be even higher than these numbers. But now let's go ahead and do another calculation with the 16 to 18.39%. But this time we'll do the average free cash flow of 157.33 million. By doing 16%, it goes from $5.98 to $11.06. And again, these numbers are pretty humbling, right? They're not crazy, right? And if you upgrade this to 18% with a sustained 570.33 million of free cash flow, you get anywhere between $6.99 to $13.16, which then goes back to our price target. I think Clover is going to go anywhere in 2025. It's going to go anywhere between $4.49 to $9.28. So anywhere between $4 to $9, right? And that's what I expect Clover Health is going to be in 2025, right? And again, not financial advice. It's just, using my calculations and the data points that I brought. This is my opinion, and don't take it as advice. This is just me on the internet, right? I don't know your personal. This does not constitute financial advice. That's why it's called personal finance. It's personal to you, and there's nothing personal about this. It's just me making a video, right? All right. So just to be kind of clear, back in 2021, Clover Health issued a share offering from the primary markets where institutions were able to buy at $5.75 per share. We're trading under that, ladies and gentlemen. So, it's very clear that, Clover is definitely undervalued here still, right? So you can see ultimately we're in a really good position, right? Now, the data that I'm going to show you here, guys, this is institutional ownership for Clover Health. You're not going to find this data anywhere else. This is proprietary to the Outstock Trades platform, right? And, you basically, what you see here is you see an ultimate downtrend for Clover, but yet you see this uptrend in regards to Clover Health's institutional investors. The question is this statistically significant? Like, does this even mean anything? Well, if you overlay the stock price, so the stock price went down and now the stock price is slowly recovering. So could this be a statistical significance? Well, the only way we can answer this question is use math, right? Which is what we did. So we went ahead and we applied a 5-period simple moving average. So we applied technical analysis within the institutional ownership history, which is pretty nifty because you can't really do that with a lot of places. And, here it is. And what you're starting to see is we actually broke out of the simple moving average and potentially almost formulating a stage 1 reaction part of the Weinstein's technical analysis part. What I mean by that, and let me just go ahead and just basically say it, stage analysis, technical, Weinstein. Let me just go ahead and just show you so you guys can, see this here. There it is. Oh, let's find something better. So as you can see here for stage analysis, here we have a simple moving average, and here we have kind of the whatever you want to measure. And when it crosses over, this is kind of like the bull cycle, and then it basically falls down. And you can overlay this cycle with a graph that we're going to show later on. But you can basically see is we may have broken out of this. Now, we have tried breaking out before, but this is quite different, especially if you look at the stock price, right? And based off of all the CMS changes, 3.5 stars sustained to 4 stars, so many different things, we may have broken out of it. But to be even more anal, we did even more quantitative metrics. Again, this is all proprietary to the Al Stock Trades platform. And you could basically see if we were to zoom in from 2024 to now, which is when a lot of the stock price moved, and we can go ahead and look at the institutional ownership in blue, look at the 5-period simple moving average, which takes 5 cycles of SEC 13F filings. Again, that's pretty awesome, right? And a 5-period exponential moving average with a trendline analysis, we can see that the institutional ownerships have surpassed. But if we can take this data and conglomerate it with a MACD analysis, which is just a fancy word for it's a moving average convergence divergence, right? So moving average convergence divergence. And what we're starting to see is we're slowly about to cross the signal line based off of this data. And we may start seeing more institutional investors piling on. I mean, for folks that have been analyzing the Clover Health stock, you're starting to see a lot of institutions come back. I think Chase just came back too, right? And they're about to go ahead and do they do a healthcare conference presentation with Chase. But ultimately here, ladies and gentlemen, you're starting to see, some pretty nifty analysis side of things in regards to the institutional ownership. But again, for folks that are interested in our platform, again, a lot of these data in the future are going to be available that's why the terminal is going to end up costing a lot of money, because we're going to really upgrade this thing. So for folks that want to secure this beautiful price, I highly recommend taking advantage of what we're offering. It's life-changing data. So that brings us to this psychology of the markets, which our beautiful Peter from our stock terminal, our CFO here, was posting it, right? So if you were to go ahead and look at the stock price here, where in this cycle are we? Now, one person said we're at complacency. I don't think so, right? I don't think so. Because if you were to graph the simple moving average 200-day for the S&P 500, and we could just basically do that. Let's do that, shall we? Let's open it up real quick and let's look at the S&P 500. And if you were to look at the 200-day, we are nowhere near breaking that 200-day. We are nowhere near here, which is what he was saying here. We're nowhere near there. We're above the 200-day, right? So this is how you can kind of use this as a 200-day to help conglomerate the data. Because if it was truly at complacency, we would be here. This is complacency right here. This is complacency, right? And every stock is different. And I think we're still in this secular bull market, right? We're still in this bull market cycle. And again, bull market cycles can last a long time. I mean, just look, ultimately, you had this recession here, right? But ultimately, look how long these cycles lasted for. I mean, you could kind of see how long these things last. I mean, this is 2012, right? So you could see kind of how this goes here, right? So let's just kind of refresh. Let me just bring it back to 2024 here, ladies and gentlemen. So you can see, I don't think we're at the complacency stage. But again, whatever the S&P 500 is, take 2 stages back. I think people from the Clover Health perspective are still in the disbelief. A lot of them are, this thing's going to go back to like 60 cents, $1. people are in disbelief and, maybe hope, right? Potentially once this goes to 4, 5, 6, 7, and potentially passes 10, then I think we're going to get to that optimism, and then we're going to get to that craziness, because I think that's kind of where Palantir went, right? So the question here, and again, people's greed will get to their brains, and then everything about Clover, they're going to say, oh, I guess I was wrong, right? And the psychology will get to them, right? So the problem is we also have to acknowledge that for folks that are emotional and are just are bearish and negative, understand that Clover could go down to $1.50. There's no reason why it couldn't be $1.50. Now, obviously, there are insider buys that are around $1.80, and potentially Vivek may buy more, right? But ultimately, it could go down there, right? And for me, I have a long-term perspective. I'm in this for 15, 20 years if the fundamentals don't break. And right now, the fundamentals are strong. And I'm going to explain what I think and what I'm looking at. Obviously, I'm going to miss a lot of things. There's just so many bullish things to talk about in one thing. And it's just hard. It's like you always like try to list them all and you forget a couple and like, oh, damn, right? So ultimately, I think we're here and we'll see kind of where this year takes us, right? So if you look at the smart money, dumb money graph, you can see smart money's pulling in on this dip. They're taking advantage. And who knows? Could we be in a correction phase? Could this start going down? I don't know. It doesn't seem like it to me, right? It doesn't seem like it to me, but smart money is taking advantage, right? Clover Health sentiment, we talked about this many times. Again, we went ahead and graphed this. Below this neutral line is bearish, above is bullish. You can see a lot of bullish news is conglomerating with inside of the news stations for Clover. A lot of bullish sentiment for Clover Health is changing. And then we also have it ranked top 1 in the industry, way ahead of Humana, United Healthcare, ranked 4 out of 1,000 plus stocks in its sector, which is in healthcare, and it's ranked overall 20 out of the United States stock market. In fact, in some aspects, it's ranked in the top 75 and also top 250 out of the 33,000 plus stocks in the world. So there's just so many bullish things to talk about, right? Then we have all these healthcare market caps being exited because of this disruption, because their MCRs are increasing while Clover Health's MCRs are decreasing. So there's just so much to be excited about given this switch in dynamics, right? And then you have ultimately free cash flow being burned from Humana. And ultimately, you could go ahead and read this. We talked about this before, right? And yeah, exactly. Just need a solid PR. We've already started to see Clover Health trickle into Wall Street bets, and people are talking about, everyone's starting to realize this thing's recovering. And ultimately, it's on people's radars now, right? I mean, Zip Trader made a video about it, and he talked about it. So it's in people's minds now, right? And the question now is, again, they just need that one solid PR. They need a contract. They need something. And I do believe they have something planned up their sleeves. Now, in terms of like a long-term approach of things, because you could see kind of the, how long it took for Humana. I think Humana had to build the Medicare Advantage market that Clover is going to reap, but also Clover has to build the AI physician landscape market. So it could take a long time. But I do think that since now we're talking trillions of dollars worth of market cap for these top big market cap, large cap companies, I do think that the intrinsic value of stocks could be easily reached. Just look at Sound and look at ultimately Palantir and whatnot. So I do think the market's becoming a little bit more efficient. So we're going to, ultimately time will tell. So I went ahead and posted this Twitter post, and I recommend folks that have not seen it, go on and like it and give it a retweet, because there's a lot of good information here. And people forget that Chamath, in his beautiful model face here, looking at the camera, like, don't mess with me, right? He's actually a really great poker player, right? In fact, he won like some championships and whatnot. He's actually really good, which is pretty cool brag in my opinion, right? But there's a lot of skills you can get out of poker. And there's this thing, I've never played poker in my life, right? But there's this thing called poker face. In fact, I think Lady Gaga made a song about it, right? So overall, so it says here, problem is healthcare is boring for people to invest in, unlike Sound and Palantir. So I think you're wrong with that statement. I think you're heavily wrong. Because if you look at United Healthcare and look at Max, it is up 420,000%, right? And if you go ahead and look at Apple and look at Max, it is up only 187,000%. So actually, United Healthcare gained more in percentage points than Apple, even though Apple's a bigger market cap. So what I'm trying to say is there's a lot to be gained here, right? So again, this just requires some finesse in looking under the hood than what looking at the surface, which most people look at, right? Hindsight's 2020. Going back, let's go ahead and read this thread. So thread number 1, CLOV is having its moment. The company is now free cash flow positive on a Q1 to Q3 basis, which what you guys already know because we did this calculation for the intrinsic value. And if you're just joining us, I recommend watching the whole video because you're leaving a lot of knowledge on the table. And I recommend watching other videos that we post because you're leaving a lot of knowledge on the table, and that's just plain stupid, right? Because we put out a lot of great stuff. And we were going to be limiting the videos we're going to be creating in the next couple of months because I'm going to go back to my academic side, right? So 228% year to date for Clover, and it's slowly rewriting its story as an AI-powered healthcare disruptor. So Q2, financial transformation. Clover Health hit positive net income for the first time as a publicly traded company in Q2. But again, it wasn't actually, I think it's true. It was based off of non-operations, right? But the adjusted EBITDA surged to $62 million year to date, fueled by improved cost management, innovative tech adoption. Q2 2024 brought $350 million in revenue, up 11%. Strong member retention and growth from membership-based 81,000 lives signals Clover's expansion is here to stay. Now, obviously, there's some discrepancies with Q3, but we're going to go ahead and talk a little bit about that. Operational excellence, we have a BER of 81 to 82%, medical cost ratio of 76 to 77%. The metrics show disciplined cost control driving sustained profitability in coming years. Clover raised its full EBITDA from guidance to $50 to $65 million. AI-powered healthcare. So the Clover Assistant is revolutionizing care by improving clinical outcomes and reducing costs. This proprietary platform is the backbone of Clover's growth, enabling a differentiated PPO strategy. There's industry recognition. Clover's flagship PPO plan now boasts a 4-star rating, a leap that positions itself for payment year 2026 rewards, but also as an advertisement for 2025. It's the only plan in its market to achieve this milestone. And specifically, a lot of folks have actually went down star ratings, like Humana. Then you have the Counterpart Health platform. The subscription as a service-based Counterpart Health is attracting market interest. With new partnerships on the horizon, it could be a major driver of revenue diversification, especially with that Iowa clinic. And even Peter said that we're not starting Iowa from scratch. We already have the infrastructure. Balance sheet strength. Cash equivalents and investments of restricted and unrestricted is $531 million. Positive operational cash flow. And a $20 million share repurchase buyback program was initiated to show management's confidence in long-term value creation. And then something I didn't even also purchase was approximately a $2 million buyback from Vivek, the founder and former CEO. And here we have our beloved poker player, Chamath Palihapitiya. While Chamath disclosed the position is now below 4.99%, it means that he is no longer required to report his holdings to the SEC. But it's worth speculating that he may still be holding a significant position. Because why would he just bring it down to 4.99%? Why not just show that he just sold out completely? If Chamath were to have sold his remaining shares directly, he would have showed us that. Given Chamath's history as a skilled poker player and a strategic thinker, I think there's more under the hood to look at. Okay? All right. So now we have our sentiment shift. So now Clover's ranking number 1 in its industry and sits among the top 20 stocks in the US on some platforms. And other platforms, it's ranking in the top 75 best stocks in the United States and in the top 250 globally. Again, not a lot of people are going to uncover this type of information. And if they were, they keep it to themselves as they accumulate, right? But, we've been laser focused And I'm trying to basically show that our platform actually makes millionaires. And I'm basically trying to show the type of research that we do. So we are seeing a sentimental reversal. Once plagued by negative headlines, the narrative is shifting as more positive news articles emerge. This evolving sentiment reflects growing confidence in Clover's turnaround and its potential as a leader in AI-powered healthcare. We are witnessing the rise of a future healthcare giant, I think, but it's going to take some time. Then we have our beloved, and I'm OCD, I should have bolded this and put a space, forgive me, but we have analyst price targets on the rise. Analysts are taking notice of Clover Health's momentum, boosting their price targets significantly. You have Matt from Craig Hillum initiating a $6 price target, which is 91% upside from its current levels, which sits right around that $575 primary share offering that they did in November 2021. We have Whit Mayo from Lee Ranks Partners, who set a price target of $4.50. Ladies and gentlemen, Clover Health is sitting at $3.13 right now. All these price targets are above where Clover Health is sitting at. Then we have Richard Close of Canaccord Genuity projecting a target of $4.20. Then we have Jonathan from UBS aligns with a target of $4. These upward revisions signal growing confidence in Clover Health's turnaround story and its ability to deliver on financial and operational improvements. This could be the start of a major reevaluation. Vision for growth. Clover Health thrives where others are faltering right now. As people are pulling out, as Andrew Choi stated, they are doubling down. This wide network PPO plan without narrowing networks with its AI-driven cost management is a scalable model ready for 2025 and beyond. And we're going to see how scalable. That's what investors are looking at right now. And Andrew Choi needs to sell the investors on the scalability. Like I said, based on my analysis, I initiate a price target of a lower bound of $4.49 to an upper bound of $9.28. Now, obviously, there's going to be market dynamics. That could be a war. There could be something that could happen, right? But ultimately, the fundamentals are what are signaling these price targets. We have analysts are increasing their revenue projections, which is backed by Andrew Choi saying that we're going to return back to a growth phase. We have analysts increasing their gross margin projections to greater than 50% based off of Peter's comment, and also an improved subscription as a service, different type of revenue generation as a fifth revenue stream based off of what Peter said. So we are entering this return to growth phase, and as time will come, we're going to see more data unravel. Remember, I'm not a financial advisor nor stockbroker. This is just my opinion, right? So if you like what you see and you like everything we talked about, right, from looking at Andrew Choi's image to looking at the analyst projections for gross margins, looking at how we can look at annual estimates, calculating the annual estimates growth rate, going in and looking at the overall guidance from its insurance revenue and calculating the intrinsic value in today's land and market value, and in the future, setting different types of intrinsic values, to going ahead, reviewing the past history of research and putting the pieces together, to looking at our proprietary institutional ownership graph and implementing technical analysis to see if it's statistically significant, and zooming in deeper with the statistically significant aspects to see, could this be a change, just like how analyst price targets are increasing and institutions are doubling down, and looking at the psychology of the market, understanding stage analysis to combining with the fundamentals, looking at smart money, dumb money confidence, looking at our proprietary sentiment progression for Clover, looking at the overall quant rank, how much money is leaving Clover, how much money is leaving the institutional these dinosaurs in the market. If you like what you see and look at our research, and if you like it, I highly recommend looking at our platform. Ladies and gentlemen, it's a privilege and honor. Pleasure to have you here, Smiles and everyone. I'll see you on the next one, and I'm looking forward to a wonderful new year. See you soon.